All right, let's talk about the IPO that everyone is buzzing about right now, the fintech company WLTH. You've probably heard the name, and there's a ton of hype. So, in this explainer, we're going to cut through the noise and break down what you actually need to know. And really, it all boils down to one big question, doesn't it? Is this thing for real? A genuine chance to get in on the ground floor of something huge? Or is it just a lot of market hype that's going to fizzle out? That's what we're here to figure out. Okay, before we get into the weeds, let's just do a super quick level set on what an IPO even is. You've heard the term, right? An initial public offering. Basically, it's a company's big debut on the stock market. They're going from a private company to a public one, selling shares to folks like you and me for the very first time. Okay, simple enough. So now let's get to the main event, WLT's big day. So who is WLT anyway? What's all the fuss about? Well, if you look past the headlines, their mission is actually pretty straightforward. They're trying to make really good, personalized financial planning available to, well, everyone, not just the super rich. And here's how they plan to do it. Their business model is actually pretty simple to wrap your head around. They identified a big problem, right? Getting financial advice is usually crazy expensive, complicated, and honestly out of reach for most people. So what's their fix? An AI-powered app on your phone that gives you custom investment plans. And how do they make their money? A classic subscription model with different tiers so pretty much anyone can afford it. It's a familiar tech approach, just aimed right at your wallet. Okay, so this is where it gets really interesting. This IPO has created a huge debate. It's like a tug of war. On one side, you've got the bulls, the optimists, who think this is the next big thing. And on the other side, you have the bears, the skeptics who are waving some serious red flags. So let's break down both sides of the argument. First, let's hear from the optimists. Why are the bulls so excited? Let's look at the case for opportunity. First off, a huge piece of the puzzle isn't even about WLTH specifically. It's about the entire industry they're in. I mean, look at this. The digital wealth management market is projected to more than double in just 5 years. That is a massive wave. And the thinking is, a rising tide lifts all boats, right? WLTH is hoping to surf that wave. So drilling down into the company itself, the bulls are pointing to some really solid stuff. They see a product that's genuinely innovative, a leadership team that knows what they're doing. They've done this before. The business model is built to scale up big time, and their revenue has already been climbing fast. You put all that together, and yeah, you can see why people are feeling pretty good about this. But of course, that's only one side of the coin. For every bull, there's a bear. And to make a smart decision, you absolutely have to understand the risks. So now let's flip it around and look at the bear case. And the first thing a skeptic is going to point to is this number right here, the bottom line. Let's be clear, WLTH is losing money, a lot of it. Now, this is pretty common for a fast-growing tech company. They're spending a ton of cash on marketing and growth, trying to get big, fast. But, and this is a huge but, the clock is ticking. Can they actually become profitable before they burn through all that cash? That is the million-dollar, or in this case, $50 million question. And that leads us to maybe the biggest concern of all, the price. Is all that hype already baked into the stock price from day one? Let's look at this chart. We're using a simple metric here, price to sales. It just compares how much you're paying for the company versus how much money it actually brings in. And wow, you can see right away that you're being asked to pay way more for WLTH than for its more established competitors. That is a huge premium. They have to deliver incredible results just to justify that price tag. And the worries don't end there. The bears have a whole list. You've got intense competition. I mean, everyone from the big old banks to other hungry startups are in this space. Then there's the sheer difficulty of making it all work. They have to execute their plan almost perfectly. And you can't forget about the IPO hype itself. That initial pop of excitement can fade really fast, leaving early investors holding the bag. Okay, so we've heard the bull case, we've heard the bear case. Two completely different stories. So what are you supposed to do with all this? How do you even begin to think about it? Well, that brings us to our final section, your personal investor playbook. Look, the most important piece of advice here is this. Your job is not to predict the future. Nobody has a crystal ball. The real goal isn't to guess right, it's to be prepared. It's about understanding both the potential upside and the potential downside, and then making a clear-headed decision that actually makes sense for you. So with that in mind, here's a simple checklist you can use for this IPO or really any IPO. Number 1, you gotta look past all the noise and really understand the business. What do they actually do? Number 2, Question the price. We saw that high valuation. Ask yourself, is that really reasonable? Number 3, and this one's crucial, be honest with yourself about your own stomach for risk. Can you handle the wild ride that comes with a stock like this? And finally, number 4, if you do decide to jump in, please think long term. We're talking years, not days. And so it all comes down to this one big question, doesn't it? When we look back in a few years, what's the story of WLTH going to be? Is it going to be about that huge vision that actually changed finance for everyone? Or is it going to be a cautionary tale about a sky-high valuation that it just couldn't live up to? Honestly, only time will tell. But now you have a framework to think it through for yourself. Thanks for digging into this with me.